Yes. Um, Today we're gonna do because we did basics already, right? We went through all this.
Um,
How to use MT4, MTWs,
uh,
what are tips?
yeah, you say we was gonna touch on zones or
Yeah, yeah.
something like
We're gonna
yeah.
start on the beginning. You pretty much have a good understanding of what this is.
Yeah, I'm basically understanding.
Perfect. All right. So today we're gonna do zones, chart patterns, market structure, trend lines.
Mm-hmm.
I'm gonna go through each, and then I'm going to merge it together so you can see how it looks all in one and how you can look for the trade, how you can I'm just gonna show you how you can see it and then how you can profit off of it, and then how
Okay.
much one of these examples could make you. I just did a call on this, so it should be very explanational, if that's the way you say it, and very quick.
Self-explanatory.
Yeah, it's gonna be simple. So first things first, we're gonna do zones. Crap, I was hoping this was empty. We're gonna do zones first, and then I'm gonna make my way down the line, and then at the end, I'm just gonna merge everything together so you have a complete understanding. So first things
Okay.
first with zones. What you want to do with zones is basically so the market, it repeats itself. So basically, what that means is if it touches a certain area, it's probably gonna do the same thing it did in the past when it touched it again, or it's gonna do the opposite. It's very easy to figure out how you're gonna do each, or how not how what is gonna do. It's very simple. It's just having the eye to see it.
Okay.
So first, if you're gonna when you're marking your zones, and usually I break down each of these topics a little more, but I'm gonna show you enough to where you know it
All
enough.
right.
So zones, what you want to do with zones, you're gonna go to the 4 hour. We always mark on the 4 hour. You're gonna mark. There's two types of zones. There's major zones, and then there's minor zones.
Mm-hmm.
Your major zones are gonna be the very lowest point of the market, so down here, and then the very top. So like this, your major zones are gonna be very tight. You don't have to get the whole wick, like you don't have to bring the zone all the way up here. What you want to do is you want to get like half of the candle and half of the wick in the zone. So this is perfect. This is good. That's really all you need.
Okay.
This wick, that means it rejected this price, so it might not even come up here. So you don't need to have the zone all the way up there. Your minor zones are going to be anything in between that touched multiple times. So anything more than two times mostly is going to be a zone for the most
Okay.
part. So this right here, and not really only touching, but also where it rejected. So this one, it was. Oh, whoops! What I do? There we go. This one, it came up and then came back down. It rejected this zone.
Okay.
Then it went back up. Um, so another zone would be right here. Yeah. Let me do a little. Nah, I like this actually. The minor zones can be a little bigger, because I want to get each of these touches plus this rejection and this rejection. So maybe a little, maybe like that. Yeah, that's good. You want to get each of the rejections and then the rejections inside the zone. Next zone could be like right here. Yeah, this is a perfect one.
Mm-hmm.
Touch here, rejected this one, touch here, touch here, touch here. This is about 5 or 6 touches. This is a perfect zone right in the middle. And then we're gonna do, yeah, like right here. About that. I maybe a little smaller, but this is a good idea of what the zone looks like. So boom, already our zones are done.
Okay.
What, 6 zones? That's a good. I try and do like 5 or 6. Anything more than that, you're kind of pushing it. Um, or anything less, you're not getting enough. But 6 is mostly like what
Yeah,
I.
yeah, wait, hold on. Someone knocking on the door right now.
All right. I hope you don't mind. Let me clear my throat.
All right, my bad.
Oh, you
You can continue.
good. So six is what I usually do. So like, let me go to this one. 1, 2, 3, 4. Yeah, 6 here. 1, 2, 3, 4. I think this one's zoomed in a little bit. 5. So 5 or 6. Yeah, 5 or 6 is a good amount. This one is a little choppier, so that's why I didn't do that many. Um, but even here, like you just want to do like one touch, 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 touch here, touch here, touch here, touch, 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 touch. These are valid touch, 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 rejection. These are valid zones.
Mm-hmm.
Um, so you want to get your zones there. This is basically going to show you that if it touches this point again, you know that it's going to either respect it and go the opposite way, or it's going to break through it and then buy or sell, depending on where it is. So, for example,
Okay.
um, for an example, what that would be is, let me see. For this one, it touched this zone and respected it, so that's why it dropped back down to this zone.
Okay.
Now this one, it broke through the zone and then it came back to touch it, then it bought. So even if it breaks through it, it's still um is gonna have to come back because it has to respect the zone. It doesn't always, but most times it's gonna, if it breaks through the zone, it's gonna come back and touch it. So for example, with that one, like another example here, it broke through the zone, it went above it, and then
Mm-hmm.
came back before buying. Same thing with this one, it went up, came down, then bought, then respected this zone, then dropped again, then went up, rejected, came back to retest it, then went up. Um, yeah. So that covers the zones. Now we're gonna skip chart patterns for now. Market structure. So market structure is just the structure of the market, literally as simple as that. Um, the market structure consists of two, and market structure is kind of, it's very similar to trend lines,
Oh,
which
okay.
is this. They kind of go together very well, and I'm gonna show you exactly what I mean by that. But there's two type of trend lines. There's an uptrend and a downtrend. Oh, I spelled this one wrong. That's gonna bug me. So your market structure is, so for example, when you're marking your trend line, you want to basically put it where you see the market following. So right now on this up, I see that from here to here, and then here, it's basically touching the same points. It's touching the same exact points.
Mm.
Came up, came back down, touched here, came up, came back down, touch here, came up, came back. It's following this trend. So now this is an uptrend. For these, it's going to be higher highs and higher lows because this is where it started. And this is the new high now. It came back down to touch the trend line. This is the new low because even though it says higher low, it's higher than this low,
Yeah,
but it's
I
still
got you.
low. It's high. Yeah. So now it goes up, higher high, higher low, higher high, and then higher low. It's just like a staircase, basically.
Okay.
These are steps. Higher high, higher low, higher high, higher low. As long as it follows these higher highs and higher lows and it stays in this trend line, it's gonna buy. Regardless, it's gonna buy as long as it follows those two steps. Now, once it breaks this trend line and it breaks this higher low, then you know, okay, it's gonna start selling. It broke this trend line, it broke it, and then it came back up. You see this wick right here? It came back up to touch this wick one more time before it dropped again. So it broke the trend line. Same thing with zones. It broke it, then came back up. And then this sold for 90 pips over a 3-day period. Same thing with a downtrend. You can either do it above it. Sometimes you can do it below it. For this case, I'm going to do it above. So same thing with this one. It touched every time it came back. It touched it, touched, and then it broke it and came back to touch it again. So now this one is lower highs, lower lows. Came down, new lower high, then dropped again, lower low. Came down, lower high, lower low, lower high, and then lower low down here before it went up to this next lower high. So basically, same thing with the uptrend, but reversed. So now it's going lower. It's a down staircase now. You're stepping down each time. Each of these are steps. This is a stair. Why does it do that? This is a stair. This is a stair. This is a stair. Each of those are going to be, it came down and then it went up. Lower high, lower low, lower high, lower low, lower high, lower low. As long as it follows those lower highs and lower lows, it's going to keep dropping. Once it breaks this trend line, now it's going to start buying. You get it? So as long as it follows this trend, it's going to continue whatever that trend is doing. Once it breaks it, it's going to break, and you're going to wait for it to touch it again, or at least come close to it. In this case, it touched it, you enter the buy right there, and it goes up. Just because you saw a trend line, now you're catching 400 pips. Easy, over like a 2-week period.
I'm not gonna lie, I am lost.
Okay,
I'm gonna tell you what I understand. I understand the higher highs and higher lows. Zones, I understand how to make it. The breakthrough, I understand all of that. It's just when you talk about wicks and rejection and
okay.
this is where it buys, and I'm like, what do you mean by like it buys? Like, what does that mean?
So these are candles.
Mm-hmm.
You know that, right?
Yeah,
Yeah.
I have the
So
app.
so the wicks is the rejection of the candle. So for example, this candle right here, this long, that means that in real time, this red went all the way down here.
Oh, I do remember you saying
And
that.
it
Okay.
rejected it. Yeah.
Okay.
And then it came all the way back up. That's what a wick is. It's just a rejection point.
Mm.
So, and then the buy that I was talking about, it not rejected. It broke this trend line. This is when you would enter for the buy. Because it was selling before, it was a downtrend. So now that it downtrend, you're going to expect a reversal, which means it's going to start buying now. As soon as it breaks this trend line, it came back to touch it, and it's in the zone. So now you're going to look for a buy. You're going to go in to buy the market now. You understand?
Yeah.
Okay, cool. So it's just two confirmations now. One, it broke the downtrend. Two, it's in the zone. Last time it was right here, it bought. So it touched here again, you're gonna expect it to buy.
Okay.
Get it? Yeah, it's just
Okay,
it's
so repeating
repeating.
patterns, that's when you expect something.
Exactly. That's
Okay, I
what the
got you.
zones are. The zones are there so that you can see where that price touched again, and you're gonna expect the same thing. Or the opposite. So last time that this was here, it dropped. It touched there again, it dropped. This time it broke through it. Now you're gonna expect a buy when it comes back to touch here. So actually, let me show you. I have a screenshot. Um, Perfect example. It's called support and resistance. So it goes above and it bounces up in here. This is the resistance at the top, the support at the bottom. It's going to stay inside of that until it breaks it. So now when it goes above this resistance line, now it becomes the new support that was down here. You get
Support
it?
line gets pushed up. I got you.
Exactly. It becomes the old resistance becomes the support. So same thing with this one. That's what the zones are. This was the support and this was the resistance. Now it broke through the resistance. Now this is now the support.
Okay.
Get it?
Yeah, I got it.
Perfect. All right, cool. So yeah, it's very like once you see it, it's very simple.
Yeah, I got you.
Broke the trend line, and it broke, and then it retested to this zone. That's two confirmations that now it's gonna start buying. You enter here and you just catch it all the way up until it breaks this uptrend, which was right here. So next thing, we got trend lines, market structure, zones, chart patterns. You know M's and W's, right?
Mm-hmm.
Yeah. Okay, perfect. So we're gonna go over these ones now. Let me clear my throat. M, you know that enter when it gets around the same price as the first leg. Same with this one, enter at the bottom. It's gonna touch around the same point. Sometimes it goes above it, sometimes it goes below it. Um, you just have to kind of see it. Same thing with this one. Sometimes the second leg is below, sometimes the second leg is above. You just have to see it and know when to enter. But M's and W's, you know that. Let me go to head and shoulders now. A head and shoulders is a sell model. Basically, what that means is it's literally as simple as it sounds. It comes
Yeah,
up
I
to
can see it.
yeah, very simple. Goes
Yeah.
back up. The head is going to be above where the shoulder is. Then the second shoulder comes close, if not the same exact price as the last shoulder. That's going to be a sell. And then inverted head and shoulders is going to be the opposite. Very simple. Like you said, you saw it off the bat. Head is going to be below where the shoulders are. This shoulder is a little above where this shoulder is, but you can see clean as day that this is a head, this is a shoulder. Now, it's very tricky sometimes because
Yeah.
before this could have been a W, which technically it is a W and it did buy. It just came back to make this shoulder before it bought. So W and the inverse head and shoulders are both buy models. Sometimes you just have to wait to see which one plays out. Same thing with this one, head and shoulders and an M, both are sell models. You just have to see which one plays out. But a good thing with this one, head and shoulders sometimes forms an M inside of one of the shoulders. So for example, you see the M here. It formed the M on that last shoulder. Now that's two confirmations that, okay, this is going to drop. You see me?
Yeah.
Very simple. and then I'm gonna show you how it looks on the market as well. I think it was this one. Yeah, perfect. Okay. Um, so this is how it looks on the market. Perfect example. It played out super clean, very simple. Right there. You have your shoulder, your first shoulder right here, your left shoulder. Then you have the head at the top, right in the zone. It gave you an M inside the zone. So that's confirming that it's going to drop. Then it gave you another shoulder right here. That's confirming that, okay, this is going to sell. So it came up, it touched the zone. It came up, it dropped, it touched the zone again. Then it bought to the next zone. And honestly, this is kind of a W. So you could have bought it right here. As soon as it touched this zone, you come out. It gave you an M inside the zone, it dropped, rejected this zone, came back up, gave you the third shoulder. On this third shoulder, you're gonna enter for the sell. You understand?
Yeah, I got you.
Got it. So you enter for the sell here on this right shoulder, and it drops. Enter right here, it drops. You hold it to the next zone. That's 200 pips. Easy. That was in a day. And also, you could have held it longer. Could have held it till it hit the same, because it hit the same price twice. 235 pips. You caught on this head and shoulders. What is this? What's it doing? 235 pips.
You're talking about buying, right?
Selling.
Selling? Okay.
Yeah.
Wait, but it was in a negative.
What happened?
It was in a negative though.
What was? Oh no. That's just how it looks.
Oh, okay.
Anywhere you go like that, yeah. When it goes up, it's positive, but this is just counting the pips. So you enter on the shoulder. This gave you 235 pips. Easy. This is a regular head and shoulders, played out super clean. And let me show you. This touched the same price. Same exact shoulder placement. It touched there, closed at this price, closed there at this price, same exact price. It came here, both of these closed and opened at the same spot. It rejected right here in the middle, came here, touched there twice again, and then right here. So it closed and opened at this same exact price 1, 2, 3, 4, 5, 6, 7, 8 times, and gave you a rejection. So this was screaming sell, 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 sell. And you could have entered on an M right up here and caught more than 235. But this was literally screaming for you to sell it. Because it's literally, you could have just had a horizontal going all the way across, and it touched each of these points. 8 times it touched it. Enter right there for the sell, 200 plus pips. This is a perfect example. Let me show you an inverse head and shoulders. I remember seeing one. Was it this one? No, it
Looks
wasn't.
like it. Oh.
It sometimes it's I'm trying to find a more clean one, because I saw one earlier. Was this it? This might have been it. Nah, it wasn't. This wasn't. It was this one. Here it goes. There we go. Boom. So this one, it came down. Now this is a lot uglier. But you can still, once you train your eyes to see it, you can tell this is a shoulder. It dropped down, came up. Now it gave you the head below the shoulder. Came up, came down to give you one more shoulder. You enter the buy there. And this bought all the way for 2-3 days. And you got a clean entry. Enter right there on the shoulder. Catch it all the way up. 150 pips. Easy. So now, let's do some calculations. 150 pips, a 0.01, and you know pips, right? You're good with pips.
Yeah, I'm okay with pips.
Lot sizes. So I'm gonna show you how you can calculate how much you would make by timesing how many pips you caught times whatever lot size you used. So a 0.01 is the lowest lot size you can use.
Okay.
A 0.01 is 10 cents per pip. So you do 0.10, you do 10 cents times 150 pips. Now that's, I think, $10.50 on that trade. Easy. Next one, a 0.10, which is a mini lot, is going to be $1 per pip, or $1 times 150 pips.
Okay.
That's going to be $150. Did I do this one right? Hold up. 10 cents times 150. Oh, just kidding. This is $15. My bad. $15, 150. A 1.00 is called a standard. Now that's going to be $10 per pip. So 10 times 150 pips. Now you're getting 1,500 for this trade. So you saw an easy pattern, gave you a head and shoulders. You entered on the last shoulder, and now what you want to do, you're going to draw a trend line from here all the way. Let's do like all the way down here to where it broke it. You draw your trend line so you can know when to come out. Because as long as it remains structure, you can stand as long as you want. So it came up, came down to touch this trend line, went up, came down, it broke it right here. This is when you would come out. So you could have got it at the high, which is 150 pips, or you could have came out right here, 114 pips. Either way, you're getting 100 pips just because you saw a clean head and shoulders. And now this one, I'm going to break down for you a little more because this one you could have got a lot of money off of it. And I didn't even realize I'm kind of tight because I didn't even see it when it happened. And this was nothing short of a bag. I went ahead and wrote this down so you can kind of see the pip to lot size ratio, which is this. Do you have this?
Yeah, I got that screenshot saved on my phone.
Perfect. So this one, same thing. .01, 10 cents per pip. 0.10, $1 per pip. A standard 1.0 lot size, $10 per pip. So now, just because I need to make sure that I'm doing this properly, 0.01 times, what was it? Two what? 246? 235. 235. On this trade, you're getting $23.50. A 0.10, you're getting $235. A 1.0, you're getting 2,350 off of this one trade because you saw a head and shoulders. Easy. Gave you the same exact price.
Hold up. Okay. All right. Fuck. All right.
Um, so just because you saw Head and Shoulders, it gave you the same exact price. This was a super, super, super clean setup. They're not always going to be like this.
Yeah.
This yeah. This one was good. Sometimes, like I said, shoulder might be above, shoulder might be below. But once you train your eye to see it, you can see it. You enter, you ride it to the next zone, and you catch your money. Now, the good thing with this particular trade is because when I go to the 4 hour, this Head and Shoulders is actually the second leg of this W. Where did my? Oh no, here it is. Of this W right here. So you see this big W. Let me move all this stuff.
Yeah, I see it.
Yeah. Um. So this was just basically a bunch of confirmations. Um. It came down, broke the trend line. The Head and Shoulders was literally right here. Shoulder, head, shoulder. You caught that sell down, and then also you could have caught this buy up. So literally, it's insane. It's insane. I caught the buy up. That's 340 pips. Let me just write that down. 340 pips because you saw a W inside the zone. Bought that to the next zone. That W turned into a Head and Shoulders. You sold it for 235 pips. Then it broke the trend line and it gave you a big W inside the zone. You could have caught this as long as it stayed inside in the trend line. So up to here when it broke it, 920 pips.
900 pips.
Yeah.
Anybody hit that yet?
Oh, plenty.
Oh, okay.
Yeah. I've seen people get like 4,000, 44,000 pips.
The fuck?
Yeah. Once you know the market, bro, you're just holding it because this was over 1, 2, 3, 4, 5, 6, 7, 8 day period. You're just holding it for like 2 weeks. And so let me break this one down for you because this payout is crazy. Even on a 0.01, the lowest lot size, you're getting $92. Easy. A 0.10, you're getting $920. A 1.0, you're getting 9,200 in an 8 day period. So now this is when it gets crazy. This is when it gets insane because in this whole period, you really could have caught like thousands upon thousands of dollars just because you saw a letter, a W on the market, and a Head and Shoulders a couple times. You could have literally made a year's worth or a few months worth of money, as simple as that, in a 2 week period. This one is 3,400.
I
So
see why you quit your job.
yeah, exactly, bro. So I'm gonna break down the whole. I'm gonna put everything together now and show you the whole thing.
Okay.
So the downtrend, it came down, it touched this point, this bottom zone. It gave you a W right here. A W inside the zone is a lot stronger than a W right here. So this W inside the zone right here is a stronger W. You know it's gonna buy. You entered right here at the bottom of the zone on the second leg. You caught it all the way up. Let's say you put a standard. You caught $3,400 on this buy. In the midst of this W, now it broke the trend line and it rejected this zone. So now it came back down and you entered on the Head and Shoulders on this second shoulder here for 235 pips. Now you caught another $2,350 on this sell. Now it came back to one, retest the trend line, the downtrend, two, to retest this zone while giving you a bigger W on the higher time frame. You catch this all the way up for $9,000.
Okay.
So now in a 1, 2, 3, 4, 5, 6, 7, 8, 9, 10-day period, 5 days each in the week, 2 weeks, you caught 5,000, you caught $16,000. Easy. If $15,000 in 2 weeks is not enough to quit your job, man, I don't know what. Because this is the easiest breakdown ever. All you're seeing
Yeah.
is market structure, a W, and a head and shoulders. Literally. As simple as that. All you have to do now is train your eyes so you can see it in real time and then find out how to enter on it. But as far as seeing the downtrend, seeing the trend be broken, seeing a W inside of a zone, like, bro, it's simple. Super, super simple. Broke down the math. You know exactly how much you're going to make on each, a point 10, 340, 235. That's $500. You made $1,500 in 2 weeks. Even that is good to be making money off your phone in 2 weeks. That's plenty.
Yeah, you just chilling at home doing nothing.
Exactly. You wait for it to break the trend. Once it breaks it, now you come out. Easy, bro. So now, oh, there was another. So you pretty much you understand this.
Yeah.
You got that. All right, cool. I'm gonna show you a couple more patterns. We went over these two, head and shoulders, inverse head and shoulders. I'm gonna show you. Go ahead and screenshot because this has all the patterns. Not all of them, but a majority, the most of them. Right here. Let me zoom in a little bit for you. It's gonna show you each. So M, W, inverse head and shoulders, regular head and shoulders, wedge, rectangles. And then over here is gonna show you what type of trend it forms on. Is gonna show you whether it's a reversal pattern or a continuation. And if the next move is a buy or a sell. So this is gold right here. This is gold. So screenshot that. And then I'm gonna show you these two of my favorites, the falling wedge or either of these wedges. And then this one, it's a bullish rectangle, but I call them flagpoles.
Flag. Yeah, they look like flags.
Exactly. So for this one in particular, I actually caught, where is it? I caught this sell. I sent it to my team. Was this it? I think I caught this one as well, actually. I entered right at the top of here. I don't remember why I entered, but it was super clean. I entered like right there, maybe a little below. Entered right there. Now, what this did, it dropped all the way down. And then it started doing like some consolidation, like it was doing up and downs. It wasn't really going anywhere. That's a prime example of a bearish flagpole. Bearish means sell. It gave you a, where'd it go? It gave you a bearish flagpole. So this came down and then it did some consolidation right here. That's a continuation. So for this one, came down. Let me zoom in a little bit more. Came down, up, down, up, down, up, down. Then it drops. Same exact thing right here. Came down, up, down, up, down, up, down, dropped. Super, super simple. Super simple. I think there's another one here. Yeah, right here. Same exact thing. Came down, up, down. Gave you a couple of those, and then kept dropping. Super simple. Like, Honestly, it can't be simpler. There's another. I want to show you the wedge. No, not that one. I saw one earlier. I hope I can find it now. This is kind of one. Yeah, this is a good example of a bullish wedge. So now this one came up, and a wedge is basically just gonna like it's kind of like the rectangle, but it's gonna start closing in now. So this one closed in like that. Same exact thing as this one or this one or whatever it was. What was that? That yeah, up. So same exact thing as this one. It came up, down, and got smaller, and it made a triangle, fudging it. So it's getting smaller. As soon as it gets to the where it's meeting, you're gonna enter for the buy. This is a continuation.
Okay.
And then just the opposite for the sell. If I can find a decent one, but those are two of my favorites, just because like they really play out. No, not that, not that. I really want to find one. No, no. This is kind of yeah. This is one. I'll do this one. Came down, same flagpole, and then it just got tighter. Same exact thing as this one. Same exact thing. Once it gets to this point, you're gonna start looking for an entry. So came down, up, down, up, down, up, down. It kept dropping. So those two are two of my favorites, along with the Head and Shoulders and the M. Um, but this example, not this one. Um, this first example that we broke down. This is a very good example. I wish they were always this clean. They're not going to be, but this was a super clean setup. If you see anything even close to this, just go in. Enter, put your stop loss super close, and you can catch the sell, catch the buy up, catch the sell, then catch the buy up. In a 2 week period, you're catching more money you can see. Like it's crazy. And then also depend on the lot size as you see. It can either be $23 or it can be 2,000. But that's just where the confidence comes in, to where you know that, okay, I've seen this before and I know it's going to play out. So instead of doing a 0.01, let me do a 0.10. So instead of making gas change, now you can pay your phone bill. You feel me? Or put a 1.00, and now you can put a down payment on a car or something. So it really depends on your knowledge, which is what you're getting now, and then the confidence of, okay, I've seen this Head and Shoulders before. I know it's gonna play out. If I'm wrong, okay, let me figure out why it didn't. But I know that I've seen this before, and it's gonna drop. Um, so you have this screenshot, right?
I keep saving clips, so
Perfect.
yeah, I
Perfect.
got you.
So you got all this then.
Yeah.
And then we went over these. So we got through zones, chart patterns, market structure, trend lines. We'll go over these next four in the next one, and then you'll be
Okay.
done with beginner. Once we master these, because you're learning it, but it takes a little time to master it. Once you master it, then we can go on to the intermediate stuff.
Got you.
Once you get past here, you should be able to make money on your own. You
Okay.
shouldn't need to like do anything really. This stuff is kind of just like extra. It's gonna make your trading 10 times better, but you don't necessarily need it to make money. Just
Gotcha.
this beginner and intermediate stuff, you can start making money by yourself, at least a little change. As you can see, like this, even off this is all beginner stuff. So even off this little beginner stuff, you could have made thousands. So I hope I broke it down enough for you where you can understand it well. You have the
Yeah.
recording, so if you don't, you can always go back or just hit me back up, and I'll try to explain it better. Um, but this stuff is very simple, bro.
Yeah. I'm
What
I'm picking up
you
on
do
it.
is like, yeah, just try and go to the market and mark it up yourself. Mark up the zones. Mark up. Oh shoot, I was supposed to do. Okay, I'm gonna do a rerun before I like a little refreshment before I close.
I was
But I
gonna
want
actually ask you for one after you were done.
to go through everything, right?
No, not everything, just like one specific one. It's tape loss and I think it's
Oh, take profit and stop loss. I got you.
yeah, take profit.
Um, so your take profit is gonna be okay. For example here, your take profit is another word for target price. So basically, what that means is if the market gets here and we enter right here for a sell, let's say we enter right here. This line, this price is where we entered. We're selling the market. Our take a TP take profit or target price is going to be where we think the market's going to go. It's your target price. You think the price is going to be right here. This is the target. So you're going to enter. You're going to have your take profit right here. That's you saying, okay, I think it's going to sell all the way to this price. Once it gets here, it's going to take you out of the
Oh,
trade.
so you kind of make a prediction. You call it with the
Exactly.
with okay, okay, I got you.
Exactly. Now the stop loss is so that if you're wrong,
Yeah,
you don't lose
okay,
that much.
it makes sense now. I got you.
Exactly. So now let's say we enter the sell. If it buys, we're out right here. Instead of it being all the way up here and we're like, oh shoot, it might keep on going. Now we can lose $5 instead of 25, 30, 50. So
Mm.
that's basically just minimizing your loss. You get it now?
Okay, yeah, I got it.
All right, cool. Bet.
So you
But
keep the take profit and what's the one, stop loss?
stop loss.
Yeah. So you keep those kind of like tight together, right? Like the
You want to
points.
keep your stop loss as tight as possible. Your take profit can differ. It can either be what your target goal is, or it can be like where you think the market's gonna go.
Mm.
So, for example, your target goal, let's say your target goal was 30 pips. If you entered right here, it's gonna be, see, that's this one candle alone was 124. If we entered right here,
Man, you popular.
I don't know why it's doing that. 86 pips. So let me drop down to the 15-minute. Zoom out a little bit. Let's just do. I don't know how to mute this computer, bro. So my bad. I'm really starting. I have to learn this computer still. Okay, I'm gonna just do this one. We entered here for the sell. Let's say we entered right here. You want to
Okay.
keep your stop loss as tight as possible because that's the money that you would lose if you're wrong. So you want to keep that as tight as possible. The target price is where you can have like a little leverage because you want to make as much money as you can, but you don't want to have it too big because let's say your take profit was down here. It got
Mm-hmm.
close and then it went all the way back up. So you want to have it decent, but not too close. Like you don't want to have it here because now you're making $30 instead of like 70.
Mm.
So you want to have it like kind of like, but that's where your target goal comes in. Like for example, if your daily goal is to make 30 pips a day, and you entered here, you just count down 30 pips. So like right here, that's where you'd have your take profit right there. Or if
Okay.
your daily goal is $30, you determine what lot size you want to use, and then put it wherever however many pips that is. So it differs on those two things: your target goal or where you think the market's gonna go.
Okay.
I zoom out and I say, and it's all the way up here, and I say, okay, cool. The last time that it dropped, it was at these two prices. It hit here, it rejected here, hit here, hit here. So I'm gonna have my TP at least around this area. It smashed through it. Now that's okay because I made my money. If it keeps dropping after that, like it's cool, it's whatever. I made my money, I'm out the trade. Because it went down a little more and then it came all the way back up to where you first entered. So imagine
Mm.
if you tried to be greedy, you stayed in it. You feel me? So it's good to have it kind of close, but not too close, because you still want to make a little money. Um, but yeah, so that's how you would kind of defer like where it would be, but always keep your stop loss close. I never had my stop loss more than like 10 pips, and sometimes like recently not even that much. Why is it doing this? So just a overview of everything now.
Mm-hmm.
Just to recap, um, we marked the hell out
Hell
this
yeah.
chart. We like
I
that.
remember how you started off though. You started off with the zones, and you said start 4 hours back, right?
Exactly. Well, on the 4 hour time frame.
4 hour time frame.
So these are the time frames: 15 minute, 30 minutes. That basically means each candle is what happened on that time frame. So each of these candles is what happened in 4 hours. When I drop down, that's why there's more candles here. It's because these are what happened in 15 minutes.
Mm.
So you want to mark it on the 4 hour because you can see a lot more of the market
Yeah, I
on.
got you.
Um, so yeah. You mark on the 4 hour, and then you're gonna put the zones. You're gonna put the zones at wherever it touched multiple times, at least 2 times. For this one, it touched only once, but I put it there just because like from here to here, that's a big area, and you don't want to miss something just because you
Yeah, I got you.
missed the zone. You feel me? And then also like if you do drag it back, like there's a zone, like it touched there, it touched there, it touched there. So this is still a valid zone. Yo, let me take these off. And then so you got zones, just mark it up on the 4 hour, and then do it wherever it touched multiple times, and then just drag
Got
it
you.
like as far as you can because obviously the market's going to keep going to the right. And then you want to do your trend lines. That's just from point A to point B. Came down, came back up, came down, came back up, came down, came back up. This is a valid trend line. I don't like having it this thick though. Pause. Um, you mark your trend line, and then you mark your trend line like going up. There we go. Trend line up, trend line down, another trend line here.
Trend lines are
Just
supposed to touch the wicks, right?
it can, but for this example, like right here, I didn't do it just because like it touched this one, and then this one. So for example, if I did it all the way down here, now it's going like all the way over here, which is still valid. Don't get me wrong, like it's still valid, but you would be out way sooner up here than way down here. So but either of those are valid. You could do the wick or you can do the candle. Either of them are valid though, for sure. But most times, like for example, right here, most times the wick will be inside with the candle. That was just an example. Not an example. That was just like that one case. But most times it's not gonna go. But that's just showing that it respected the trend line. It dropped below it and then it came all the way back up and then continued the buy. So that's just a confirmation that okay, it's gonna keep buying. But yeah, mark your trend lines. If you need to, put these lower highs and lower lows there just so you can see it visually. Um, Market structure, trend lines, zones, and then you have the market patterns, the chart patterns. You have the pip, got that there. So yeah, pretty much whatever, everything. It can be very simple, bro. You're learning the easiest way to make money, the easiest technique to make money on this in this industry. This is the break and retest strategy. You're literally marking up zones and waiting for it to break it and retest it or respect it. It doesn't get easier than that. Really, it doesn't. And then you just look for formations inside the zone. So look for W's, M's, or head and shoulders inside the zones. Look for stuff like that. So for example, this one is actually a head and shoulders. Let me drop down to the 1 hour. Yo, why is it doing that? It's ugly, but it's there. Shoulder here, head, shoulder. You see it? Came up. Yo, why does it do this?
I
Right
forgot
there.
my mic was muted. Hold up.
You good?
Yeah, ask you a question. So when you're looking for shoulders, heads and shoulders, or W's and M's, do you have to be under a specific time frame? Like you have
Nah,
to
it can be on any.
any? Okay.
Only thing I would say it can be on any of the time frames. It's just that when you go to the higher time frame, it's going to be stronger than if you saw it on the lower time frame.
So
But
4 hours would be stronger than 30
exactly.
minutes.
For example, if you see like how we saw this W, yo, this is actually bugging me up. If you see this, see how we saw this big W on the 4 hour and it bought for 900 pips. If we see a W on the 30-minute, like for example, like this one, this is a clean W. It bought for a little while for sure, but it's not 900 pips. It's 155. Then it dropped. So if you see it on the higher time frame, it's most likely going to be a lot stronger than if you see it on a lower time frame.
Gotcha.
So but yeah, so you want to look for the head and shoulders, the patterns inside the zone. Also, this one it touched the same exact wick, same exact price, and then dropped. So you could have entered right there, went in for the sell. This one kept selling. It's still selling. So you couldn't have been in here since it formed. Lowest it went, 170 pips. It's at 108 right now. So you'd still be in your bag easily.
So no,
Yeah.
continue.
No, I was done. Go ahead.
Okay. So I was gonna ask about the shit, I forget. Oh, so when it goes down, you can still sell it, right?
What do you mean when it goes down? Like after it starts to drop?
Yeah, like when it starts dropping. Like, is that a good thing or a bad thing?
Yeah,
Or
yeah. If you're in the sell and it starts dropping, that's a good thing. that means you're making money.
Oh, so if it goes up, that's a bad thing.
Yeah.
Okay.
If you're in a sell, yeah. If you're in a buy and it goes up, that means you're making money. If it drops and you're in a buy, you're losing money.
Mm,
Stop loss is going to just minimize how much you lose.
gotcha.
Um, any other questions?
No, that's it.
All right, cool. You got the recording, so you can watch
Yeah.
it if you want. I also recorded it.
Yeah, I
Next
can see in the
call,
upper left.
yeah. um, I'm gonna probably send it out to a few people. I'm gonna text you for the next call so we can figure it out.
All right.
Uh, but just try and that's all I was gonna say. Just go to the market and try and mark it up yourself. Try and mark the zone. Try and mark the trend lines, and look for formations. Just screenshot it and send it to me. And then I'm gonna just basically be like, yeah, that's valid, or be like, nah, you can change it by doing this. The next call, I'm gonna have you share your screen, and then I'm gonna have you mark it up, and
All
I'm
right,
gonna show
gotcha.
you. Yeah, I bet. Um, so yeah, that's pretty much everything. Um, uh, that's everything I got. After this, we only have a couple more things till we're done with beginner, and you're at intermediate, bro. That once we get there, once you master those things, you're making money. You're making money, bro.
I like that.
And you just joined what, like last week? Not even like who's that? This wow. This strategy is the easiest strategy you can use to make money, bro. You're learning these things like this. You've been in for like a week, and you're about to start making money.
It's not
Hopefully
that
by next
hard.
week. It's not hard at all. That's all.
Actually,
Once you learn the basics, everything becomes simple.
yeah. Hella.
So so yeah, bro. I'm gonna text you. We're gonna figure out when's the next call. That's all I
Mhm.
got for now.
But wait, hold up.
What's up?
Go to the graph real quick, cause like
Yeah.
when I'm in it, I'm not sure like which tools to use or like how to find them, cause I use the what's it called? I use
MT4.
yeah MT4.
Um, Shoot. I wish I had it on this computer. It's kind of the same thing. Um, you're gonna use the rectangle. I think it's in like insert, and then it's gonna be in shapes for the rectangle. For the info line, it's gonna be the crosshair. Like this one is gonna
Crosshair.
look like this. All you have to do is just click it and drag it, and it's gonna show you how many pips it is. Only thing with that
Okay.
is, it's gonna come up like this. Like let's say this is what the pips are. This is not 1920 pips. It's gonna be 192. You're for MT4. You're always gonna tick off that last number.
Okay.
It says like 3743. It's 374 pips, not 3743. But the rectangles are going to be there. And insert where the shapes are, and then the info line is just the crosshair.
Okay.
So just like play around with it. You'll find it. It's
All right.
pretty
Yeah.
easy.
All right. I see everything.
Word. All right, bet. Perfect.
All right. That's all I needed.
That's all.
Yeah.
All right, bro. Appreciate you pulling up.
All right. Yeah. Of course. No problem.